Good morning, ladies and gentlemen. I welcome you to Zeder's annual general meeting of shareholders via electronic communication. I will be acting chairman as Chris Otto is unable to attend due to medical reasons. Since there is a quorum of shareholders present and proper notice of this meeting was given, I declare this meeting properly constituted. The notice convening this meeting was posted to shareholders on 17 June 2022, which I take as read. Zeder shareholders or their representatives who are entitled to vote at this meeting had to follow the registration process detailed in the notice of this meeting. Following successful registration, the transfer secretary would have provided you with the details on how to access the meeting by means of electronic participation. Zeder shareholders or their representatives logged into the website will be able to 1. View the resolutions, 2. Vote by selecting for, against or abstain in respect of each resolution, 3. Receive a pop-up message confirming that your vote has been received once your selection has been made, and 4. Change your vote while the poll remains open. I will read the proposed resolutions in the same order as they appear in the notice of this meeting. Please select the Vote tab to cast your vote. After the resolutions have been presented, the voting results will be displayed. The administrator will now open the voting via the website in order for the shareholder or their representative to vote at his or her leisure. Questions. Any shareholder or guest who wish to ask a question can click on the Q&A tab and type your question at the bottom of the screen and press send. Any questions previously submitted to Zeder's company secretary email prior to the AGM will also be addressed after the presentation by Johan Leroux, the CEO of Zeder. Presentation of annual financial statements. Zeder's audited annual financial statements as circulated together with the notice of this meeting are hereby presented to shareholders, which I take as read. We require your approval for the following ordinary resolutions. Ordinary resolutions 1 and 2 to re-elect Mr. Otto and Ms. Majoli Makubi as directors. Please record your votes. Ordinary resolutions number 3, 4, and 5 to reappoint Ms. Kasim, Mr. Otto, and Ms. Majoli Makubi as members of the Audit and Risk Committee. Please record your votes. Ordinary resolution number 6 to reappoint Deloitte & Touche as external auditor. Please record your vote. Ordinary resolutions number 7 and 8, the non-binding endorsement of Zeder's remuneration policy and Zeder's implementation report on the remuneration policy. Please record your vote. Then ordinary resolution number 9, the general authority to issue shares for cash. Please record your vote. We require your approval for the following special resolutions. Special resolution number 1, approval of the remuneration of the non-executive directors. Please record your vote. Special resolution number 2, the general authority to provide intercompany financial assistance. Please record your vote. Special resolution number 3, general authority to provide financial assistance for the subscription and or purchase of shares in the company or a related or interrelated company. Please record your vote. Special resolution number 4, general authority to the company and its subsidiaries for the repurchase of the company's issued shares. Please record your vote. As you have all recorded your votes, the administrator will now close the voting via the website, and I shall announce the results once displayed on the screen. Ladies and gentlemen, I can confirm that all the resolutions voted on have been passed by the requisite majority of shareholders. All decisions have now been finalized. Details of the results will also be released later today on SENS. Johan Leroux, the CEO of Zeder, will now provide feedback to shareholders on behalf of this Zeder Social and Ethics Committee, whereafter the meeting will be closed. Johan will then also make a short presentation regarding the business and answer any questions shareholders or guests may have. Thank you again for everybody's participation.
Thank you, Mr. Chairman. Good morning, ladies and gentlemen. Thank you for your time today. As Pete mentioned, I will do a short presentation today and also provide some feedback from the Social and Ethics Committee. On the agenda today, in other words, feedback from the Social and Ethics Committee, I'll discuss some post-balance sheet events and material transactions that happened post our 28th February year end. I'll give you a bit of a view of our sum of the parts, what it looks like after these transactions. I'll spend some time on our remaining investment portfolio, the matters that's topical to them, strategy and prospects, and then the opportunity to answer questions. So please, if you would, during the presentation, email or send your questions through, and I will respond to them at the end of my presentation. In terms of the social and ethics feedback, Zeder implements our adherence to social ethics obligations through deliberate participation at investee company level and also aligning and monitoring at a holding company level. Our social and ethics and governance reports are available in our 2022 annual report. We are a responsible investor, and together with our investee companies, we consistently aim to apply best practice from an ESG perspective. We are in agriculture, we are in farming, so we understand that the environment is critical to the long-term sustainable operations of our investee companies. In terms of our portfolio investments, Kaap Agri and our only listed company and unlisted companies, they all have formally constituted social and ethics committees. You'll be able to see more information on Kaap Agri's social and ethics feedback in their integrated annual report. In terms of our unlisted companies, in terms of Agrivision Africa specifically, there we also are in compliance with the IFC Global ESG guidelines, where the IFC and Norfund are our co-shareholders. It's impossible to record, all the initiatives across the group. Below is just a few examples of our actions and intentions. We focus on those specific 4 pillars of education, skills development, sustainability, and community outreach. In terms of education, investments in bursaries, pledges and support to make schools economically self-sustainable, early language literacy development courses. In terms of skills development, as I said, we're in agriculture and farming. Farmer development programs is very important to us. Also skills development of scholars and teachers. We have schools on many of our farms, and then also occupational health and safety training. In terms of sustainability, from our seed business, distribution of vegetable garden kits to disadvantaged communities, sponsorship of seeds for impoverished communities, and then also support, and report on initiatives to try and mitigate the effects of climate change. In terms of community outreach, contribution for meals for schools, orphanages, basic health services, sponsors of sports, and obviously during the COVID pandemic, provision of food and water, to disadvantaged communities. So we believe we contribute significantly to society. We view ourselves as good corporate citizens, and we're dedicated to making a positive contribution to the environment, our communities, and our stakeholders. In terms of the post-balance sheet events, these are all transactions that happened post our year end. As I reported on our year-end results, the disposal of the investment in the logistics group took place at the end of March for consideration of 1.6 billion rand. Of those funds, we've received 1.35 billion to date. That's enabled us to pay for the special dividends. There are still some earn-out payments due of about 218 million rand. These are links to extensions or renewals of agreements. It's not linked to profit warranties. Even though the timing is uncertain, we're optimistic that these earn-outs will still be paid during this current financial year, and that will just be over 200 million rand. Then the unbundling of Kaap Agri, that effective date was on the 4th of April. The value was more or less 1.6 billion rand also. We believe the unbundling was in the best interest of Zeder shareholders. Zeder shareholders now have a direct interest in Kaap Agri. We've got a long history with Kaap Agri. We're proud to have been associated with this group, the board and the management team. As I mentioned, the sale of the logistics business enabled us to pay a further special dividend as part of our February 22 year end. That dividend of 92.5 cents was paid in May. That was an additional 1.42 billion rand of cash that was returned to shareholders. And if you take this current special dividend and also the two dividends from the prior year as a result of the Pioneer Foods disposal and Quantum Foods disposal, it's just over 5.66 billion rand that has been returned to shareholders. The recent corporate actions, and all these dividends had a positive impact on Zeder's value creation for shareholders. I mean, our strategy is to create shareholder wealth. If you were a shareholder 3 years ago on the 28th of February 2019, you would have had a Zeder share price of 4.23 per share. Since then, if you add all the special dividends and the unbundling of Kaap Agri, you would have received around 4.46 per share, and then also have a remaining stake in our current portfolio. So if you work that back in terms of the same discount applied, that would have been growth of 53% in your shareholding over those 3 years. And we must remember that was also during the main COVID pandemic period. In terms of some of the past update, as I mentioned, on the left-hand side is our year-end results. On the right are some of the parts as last week. We don't revalue our investments, only at an interim and a full year basis. The reason for the increase in the ZART valuation is as a result of the Zeder bridge loan that was converted to equity. So you'll see currently, obviously, the logistics group and Kaap Agri no longer part of our group. The logistics earn-out is under the other bucket there. It's included in that 267 million rand. So yes, you'll see we're a much smaller business, but we still have 3 very good portfolio companies. In terms of our portfolio, just quickly going to touch on COVID and the Russian-Ukraine conflict. All the COVID restrictions on Africa is all gone now, but our portfolio is still feeling certain pressures. Our management teams must be commended for how they handled the pandemic with their proactive measures. We still see there's significant supply chain constraints, leading to increased costs and margin erosion. We've got significant efficiencies at our South African ports, and that is an obstacle that obviously increases costs and results in delays. And that's mainly affects our Cape Span business. But our portfolio has been resilient. I think they are performing well, and hopefully we can put COVID behind us. In terms of the Russian-Ukraine conflict, the impact on our portfolio, obviously a pressure on agri input costs. I think we all see the inflation pressure on the consumer and also on the agri sector currently. There's some further additional risk, and that's the availability of agri inputs, especially if you've got planting seasons. Things like certain seed and fertilizer need to be delivered in specific windows. But then again, the counter to that is that currently we see high soft commodity prices, especially wheat and soya. And that bodes well for agrivision. In terms of ZART and specifically maize seed, it's our investment in Turkey. It's quite close to Ukraine and Russia, and we are, that business is a trading partner. Only 7% of their revenue, of maize seeds revenue, is trading into those markets. We actually see significant benefits for maize seed as certain seed companies start moving their operations to Turkey away from those countries where the conflict currently is. In terms of our portfolio, ZART, the business run by Antonie Jacobs. You'll see in the left top logo, East African Seeds. That's our new acquisition in the prior financial year. As I mentioned, that loan of 330 million rand was converted into equity via the rights issue on the 30th of April. And as a result, the increase in the valuation. We've seen good performances from Agricol. Agricol is our sunflower business. With the higher input costs, farmers move away from maize, more into sunflower, into commodities that require fewer inputs. So that's done well for Agricol. Our agri-chemical business, FarmAg, has done very well. They're making very good inroads into the Western Cape, and our Turkish business has also performed satisfactory. EAC is now also contributing to earnings, and that investment will be a key growth asset for Zeder in terms of distribution of our own IP products through the East African channel. Bakker is still feeling the niggling effects of COVID. There are some trading issues in North Africa and the Middle Eastern markets. We're focusing on those. As I mentioned, the Russian-Ukraine conflict, very minimal impact on maize seed, even though we see opportunities. But I think going forward, there will be high input costs, but the focus for this business is on margin enhancement and obviously our own IP seed varieties. In terms of valuation, we don't adjust it formally in terms of a valuation model. We only do it at interim and full year. But as I mentioned before, obviously the rights issue had an effect on the valuation in our books. Valuation for Zeder, at our year end, we're doing it on an EV/EBITDA multiple. We apply specific factors for seed and chemicals. We normalize the EBITDA downwards to strip out the effects of hyperinflation. Obviously, Zimbabwe is in a hyperinflationary environment, and then deduct the net debt from this valuation. In terms of Capespan, our business run by Tony Fuchs. The farming operations, the citrus and poem, had very good agricultural seasons, and there were very, very good volumes, and that's specifically on the farms. But I think this industry is really feeling the pinch of supply chain constraints and inefficiencies at our ports. As a perishable product, longer lead times and delays, means to quality control issues, and as a result, therefore, you realize a lower price in the market. Capespan focuses on 3 divisions. The poem division is largely immune due to some of these delays because you can keep apples and pears in a controlled atmosphere environment, so you don't have to deliver it to the market. But commodities like citrus and grapes, they're more perishable and therefore more at risk to all these supply chain challenges. I think it's important to note that these dynamics are not unique to Capespan. It's an industry-wide dynamic and challenges. And going forward, the focus for this business on managing, good volumes, good quality, and obviously the current market risk out there. In terms of valuations, also not adjusted at interim and full year. Our valuation on Capespan is based on a group NAV, adjusted for company-specific factors. We do independent third-party valuations on all our farming assets and pack houses. And then our associate investments, we value at a P multiple, but that's a much smaller part of the business. And then obviously we apply a market-related discount to the Capespan group NAV. In terms of Agrivision, the business in Zambia that's run by Stu Kearns, we've sold the milling operation. We've signed agreements, and as I mentioned, the high soft commodity prices currently bodes well for the farming operations. Our Mukushi farming operation, we have 2 big farming blocks. One is in Mukushi and one is in Sumawe, Mapongwe area. Even though the summer rainfall was sporadic and our dams got less water, we're still planting full wheat there. Mapongwe milling operations been mothballed in anticipation of the sale, so there are no more losses coming from that business into our books. And yes, the commodity prices is high at the moment, and we think that will remain in the medium term. Similar as a farming operation, obviously we'll have a focus on inflation cost management and timely availability of agri inputs and equipment for these key planting seasons. The sale of the Mapongwe milling operation, and the good operation performance from the business will result in further reduced debt. The valuation also unchanged from our year end, even though the business is in a far better place as what it was, 2 years ago. Also based on a valuation of NAV based on Agrivision Group NAV, adjusted for specific factors. And we once again do independent third-party evaluations on all these farms. In terms of our strategy and prospects, our strategy hasn't changed. Our objective remains to maximize shareholder wealth. We need to grow our portfolio companies. We need to ensure that we can pay dividends to our shareholders. and then we also evaluate disposals when appropriate. And we believe that we fulfilled on that strategy over the past year. I think the TLG group disposal, the unbundling, and also the special dividends had a positive impact on Zeder's value creation for shareholders and also on our share price. In terms of the prospects going forward, we're sitting in a good agricultural cycle. That's obviously very good for our portfolio companies. Yes, we have supply chain risks and challenges, and the Russian-Ukraine conflict also has implication portfolio, but they're being monitored and they're being managed well. In terms of the approaches we have on our portfolio investments, we remain engaged with third parties on our portfolio assets. As I said before, our strategy is to maximize shareholder wealth in an appropriate and responsible manner. If there are transactions to be done, we want to do good transactions for shareholders. These take time, and we will obviously report back to the market when appropriate. Ladies and gentlemen, this brings me to the end of my presentation. I'll be available to answer questions now. If you can maybe just give us a minute or so just to collate all the questions. Thank you.
Thank you, Johan. Good morning, ladies and gentlemen. Just a reminder, please post your questions while we go through the questions that we received. I note that there are some questions that overlap or may have been addressed by the presentation, Johan, but I'll go through them and you can decide whether you want to expand on what you've presented. So the first question is, please can you give an update on how Zeder and Capespan are doing given the current agri environment? I think you may have touched on it, but if you want to elaborate, how are the current logistics challenges in Europe impacting Zeder?
Yes, I think both companies is in a good space. I think on Capespan specifically, as I mentioned, we have got very, very good performance on the farms. The problem is logistic challenges. Citrus is a smaller part of Capespan's business, so currently we are in the citrus market. I think the key thing will be is how the grapes pan out towards the end of the year. But I mean that's 6 months away, and hopefully some of these challenges in the ports have been alleviated by that time. Zeder's having a good year. We've got EACs on our books at the moment. They have a June year end, so we'll report their full year results as part of our interim results. Logistics in Europe and the EU, it has an effect on Zeder, specifically the availability of seed in key markets in those specific windows. I think that's probably our biggest challenge, is to make sure that we can somehow get the seeds in the specific countries in time to be planted. So yes, the business has got challenges, but I think overall we're in a good macro agricultural environment, and our businesses are well positioned.
Thank you. Are there any specific next steps in unlocking further value which you can share? And I think that you answered to say you remain engaged with third parties, and when appropriate and firm, one will come back.
Yeah, that's correct. I think, as I said, we want to do good transactions if we do transactions for shareholders, and we're patient. We're not under any pressure to sell any specific assets. If we can do a good transaction for shareholders, then we will engage.
I think there's a further question on Capespan and EU issues regarding citrus and exports, but that I believe you've just addressed.
Yes, I think so.
The next question is on Zeder. So, is it correct now that 1 billion of... Sorry, could I please ask on Zeder? Correct me if I'm wrong, but I seem to recall that Zeder has around 1 billion of debt, and Zeder has extended Zeder a loan of 300 million. That loan, I think, has been repaid. I think you said it's been converted to equity, the 300 million. What is the current position on debt with regard to Zeder?
Yes, so Zeder's current debt is just under 1 billion rand. So it was much higher than that prior to the conversion of the loan. So currently the debt position is, just under 1 billion rand.
There's a further question on the global demand for seeds remains robust, and due to Ukraine war, edible oil sunflower is in high demand. can you give us an update on Zeder and its current prospects? I think you have addressed that in the previous question.
Yes, I think so.
How did Zeder perform in the 6 months from 31 December to end of June? Has the performance of the first 6 months been continued?
Yes.
It's early days on the
Yeah.
second part, but yeah.
Yeah, I mean, Zeder has a June year end, so we've got a good view of where they are. They perform well. Obviously, as a seed business, you've got a agri input cycle, so you loss making in a certain period and then you profit making in the next period. But for Zeder, because we have Southern Hemisphere and Northern Hemisphere operations, these tend to dovetail together. But no, I mean, we expect a good performance from Zeder and an improved performance from that prior year.
And the next question, with PSG undertaking its own unbundling and buyout of minorities, Zeder will be part of an unlisted PSG. Zeder will remain a listed company on the JSE post the PSG event. Does this make long-term sense given the limited portfolio of assets held within Zeder?
If I understand the question correctly, it's about shareholding at a Zeder level. I mean, Zeder's got its own board, our own strategy. So I think from our point of view, whether we have a listed or unlisted shareholders is almost irrelevant to Zeder's prospects.
Can you give us an update on operations within AgriVision, and is the asset still held for sale?
Yes, I think we've been clear that it's been a very difficult investment for us and that we'd like to exit in a responsible way. We have 2 other shareholders there, the IFC and Norfund, so we are engaging with them. This business has gone through a very tough period. It had, debt on the balance sheet that we had to address. We had to address the loss-making Mapongwe milling operation that also hasn't been a good investment for us. So, with the sale of Mapongwe milling and also the debt significantly reduced as a result of the good performance in the past year, and also, as we currently are, it is still an asset held for sale, and we think, the prospects of a transaction now would be far better than it was 12 or 18 months ago. But I think we've been honest with the market that it's been a tough investment. We've had impairments on the specific investment, and yes, if we can exit it, with the other shareholders or maybe on our own, then that's something that we will consider.
Yeah, there were further question or 2 around Mapongwe milling, but it comes down to, can you indicate what the sale proceeds were of Mapongwe milling?
Yes, well, the proceeds were about $4.5 million, so significantly less than what we paid for the investment. The milling operation, the Copper Belt, is a difficult place to operate. And yes, we've gone through a process, and I think we're happy to exit that investment.
The next question is, what is the holdup and the problems associated with the disposal of Cape Span? The press reports that you have not received offers in line with what you expect fair value for those assets are. In line with this question, you have stated that it's your intention to maximize value. In other words, waiting years to sell an asset for only a meager increase in price does not necessarily mean shareholders get the best possible return on their equity adjusted for the time value of money.
Yeah, I think one needs to be realistic. I think the fresh fruit segment in South Africa is in a very difficult place. I think that in itself, makes it difficult to do transaction on this type of investment. And I think it's also important that, we've been approached by parties. We've not gone out and said this asset is for sale, apart from AgriVision and probably. So, we still, our promise to do good transactions, if we can, still stands. But if there's not a good transaction on the table, then we won't proceed with it. But specifically in Cape Span, the fresh fruit segment, it is very difficult out there. And for businesses that's acquisitive for this type of business, they will probably also struggle due to all the supply chain issues.
Thank you, Johan. I note no further questions. We can give it another 30 seconds or 40 seconds to see if something doesn't come through. Otherwise, that would be the end of the question section. So we'll give it another couple of seconds. Nothing further. No further questions. So thank you, Johan.
Thank you very much, ladies and gentlemen. Thank you for your time today. If there's any other questions, I'm happy to answer them. I think you've got the COSEC email also. Happy to address any further questions as part of an email process. Thank you.